This channel is for educational purposes only. Please do your own due diligence before making any investment decisions.
Hey, welcome back to Invest Like a Pro. This is Joe Rabil. Hope everyone had a nice holiday weekend. I'm going to go into a specific trade setup that has a lot of detail to it. I think you guys, especially the ones who are taking my course, I think will get a lot out of this. What I'm trying to do is continue to delve into the subject of entries, setups, and give you some, non-perfect examples so that you have at least a framework of how I think, because it's just not that simple. You're looking for perfection on every trade. It's going to be really difficult. You have to be able to make some adjustments. And one of the things you have to look at is price. And when there's a specific price pattern in place, I give one on the setup side and one on the trigger side that you got to be aware of. And if you are, you can take advantage of it. All right, let's go ahead and get into this now. Just quickly, if you have an interest in learning more about my approach, I would suggest starting with the book, which I am offering at a discount right now. Go to rabilstockresearch.com/book to find out some more information on that. Okay, so a lot of times when you get examples from guys on the internet, they're giving you kind of perfect examples. And what I don't know if you've noticed, but what I try and do is find ones that aren't exactly perfect, because that's really how the world works of trading. It's a little bit more difficult than it might be when you're just reading a book or watching a video about it. So what I want to show here is Dropbox. This is a tough trader. It gave some, it's got a great overall pattern in place. It's something I've been highlighting to my subscribers. We talked about it a couple times, especially at the webinar we were talking about. I do a webinar once a month for the subscribers where we go into a lot of detail, and I do a lot of questions and answers with them about what is the proper entry, how do we want to enter these, how do we want to handle them. And this was interesting because it had a really kind of a knife down move, but it came down to support and bounced right off the 40. And I consider this more like a zero line reversal. It showed a little bit of momentum kicking in, and then it had this move, and then it made the move to the upside. It had the higher low. I would consider an undercut and rally, which is one of the patterns out of my course. And then we get a move up and we get a pullback. So question number one becomes, is this a setup? So the way I look at it is I put out these stocks that I think have really good looks to their bigger picture. So that's what I'm basically sending out to the subscribers. And what I tell them is you don't have to play them for a longer term play off the weekly. You can wait for the timing and take advantage of swing trades if you want off of the daily chart. And so you just have to know who you are, what you're trying to be. I have some guys that want to play the longer. I've got some guys that like to do the quarterly and monthly combo, but mostly the longer term players are monthly, weekly. And the vast majority of the guys that take my services seem to be more like weekly, daily. Now, what I notice also is we've got some guys that do like to swing trade. All right. And so if you get this pullback, we know we've got the underlying support in my favor. Like I have the wind at my back. I can look at this stock and make a determination. Is this a trade setup? And I would say, yes, it is. All right. And I'm going to give you my reasons why. We had when we get an undercut and rally pattern, all right, it does overcome this, all right, this type of overrun, this type of harsh selling. Because what happened? You sucked a whole bunch of people out and then you reversed the pattern. So you got to kind of accept that this was a bit of noise of people getting taken out of the trade, all right? And so, and again, this is in my course. I do go into this, is that when we have the undercut and rally, we want to look at things a little bit differently. It's the one thing that can allow you to override some of what you're seeing in the indicators, because price is always going to happen. You're always going to get a reversal quicker in price than you will in these lagging indicators. All right. Now we get that move, we get a pullback here. And so there's a couple of things you got to ask yourself. Number one, on the way up, did I show good enough momentum to consider this playable? All right. So that's question number one. And I would say you definitely got confirmation on a MACD basis. We went to a new high in price. We went to a new high in MACD. Now, on the way up here, green DI made a move up and kind of stayed up. Wasn't all that dynamic, but again, so you got to understand how this is calculated. And if you do, you'll understand that this type of movement and this type of jagged action is going to be very hard to keep pace. It takes a long time for a green DI to get back and going again after this harsh move to the downside. Now, this was a harsh move to the downside, but in reality, it was bullish. Okay, so so hopefully this is making sense in terms of the MACD will make a turnaround a little bit quicker. We had a pinch play here, right? Now, this did overrun here, all right, but it's close to the zero. This was the first cross of the zero line. You see how this is a little tricky? I mean, you could be saying, oh, yeah, Joe's saying this is a zero line reversal now, and you know what I mean, like instead of an overrun. But here's the thing. The first time you pull back after crossing the zero line, you should be thinking it's not overdone. I mean, normally when I'm thinking overrun, I'm thinking it's overdone and it needs to correct. Well, that's not what's happening here. This is early in the trend. This is just shifting. Things are just shifting. This just had a really strong move in MACD, so it got a little bit away from the zero line and it was coming back. All right. So if this all happened a little bit closer to the zero line, then it would have been an easy decision. But I'm sort of taking it into account that that we made such a big move, and yes, it pulled back, but we still have a rising 18, right? We've got the 40 rising underneath. So when we have that, I'm willing to override this. Okay. Now I am keeping in mind what's taking place on the bigger time frames. All right. I know what's going on the bigger time frame. So if I'm trading this, and I know that we've been talking about it on the monthly and weekly. Well, I'm only trying to play, if I'm swing trading, I'm only trying to play a piece of the move. I know the bias is to the upside. I just want a piece of it. I just want one leg. So, and if you were swing trading, you should be out by now, I would think. I would think that you had decent move to the upside, maybe took a little bit off, and then we had narrow range spinning top, narrow range topping bar. I mean, you're kind of pressing the envelope a little bit. I know it hasn't dropped or anything, but you're pressing the envelope if you're a swing trader and you're still in this, I think. I mean, I normally what I'm trying to do is sell expansion, all right? This didn't really have expansion, so you could be trailing a stop below the low of the last 2-3 bars if you wanted to do that, but you should be, I would think, pretty close to being either stopped out or out of the position if you're a swing trader. Now, the other thing you can do on your exits for swing trading is on the way up here, you can take a look and see what's going on a momentum basis. And you can see that MACD did not confirm this last peak. Green DI stopped confirming back here. So you would have been stopped out. Using my approach, I've done a couple of videos on this. You'd been stopped out there using the DI. And you would have been stopped out probably on this big red bar using the MACD. So either way, those are potential exit points. But I really wanted to just point out that you've got this pullback, right? You've got a little overrun. You don't have a lot of strength here, but you have to understand that it's an undercut and rally developing, and that sometimes these are going to lag. So if you understand that, I think that'll really help. Now, one other point I want to make is on the entry side. So we get this pullback and we get overrun of the 18. We're above the 40. Both lines are rising. Look at what happened. Look at this narrow range bar and then a little narrow range doji. All right. We get those back to back. Now that's taking place when this is down here. I don't think you can draw the trend line, but like this is probably as tight a trend line as you want to draw on this. I mean, you could theoretically do that, but I think that I don't think you can really, I don't know that that's really a good enough pivot to draw off that. So if I'm looking at this, that's the trend line. However, something happened on this chart that would lead you to believe that you can provide an earlier entry point. And I want you guys, I'm quizzing you guys, so I want you to think, what do you see that would tell you that you could actually do something quicker because of what's taken place. And you don't have to send it back, but you want to quiz yourself on this, and I'm going to answer now how I see it. There's two different entry patterns, I think, here. The aggressive entry and the more conservative one. The more aggressive entry is this. We drop down and the 18 cross below the 40, and we stay below for a very long time, and then we pop in and we pop out. All right, so we're in the zone between the 18 and the 40, and then we try and come back out and go to a new low and just trend to the downside. But look at what happened. It didn't do that. It came down and tested this low, and it reversed. And then look at the monster greenie. After momentum divergence and confirmation with the second MACD cross to the upside, right as red DI is crossing back to the downside and green DI is making a second higher high, we get a big monster greenie crossing the 18. That is your first trigger in this situation. It's not a trigger one based on the course because it's below the trend line. It's an aggressive entry. If you're an aggressive player and you want to do that, you know all of what you're seeing. You know you've got underlying support. You know you've got two back-to-back dojis, a couple narrow range bar, and then a doji bar. You know you're sitting on the 18-week line, right? I mean, you've got a lot of things that are suggesting that this could be a good entry. So if you want to play aggressively, there's nothing wrong with doing that. Your stop's going to go underneath these bottoms. And hopefully if it doesn't work, it's a small loss, and then you look for your next entry. The second entry would be break of the downtrend. All right. And then we get our little pinch right here. See this right before it's breaking the zero line. But here's the key. To me, this is the more conservative entry that's not a bad one in this situation, and that's because green gets back above red. Now, we did have some overrun here, and we had some pretty harsh selling here. Now, what I'm telling you is that this trigger, this is one of the triggers out of my course. This is trigger 2. When we go in and we come out, you have the luxury of playing more aggressively off the bar chart if you get a big green bar, and you can kind of override some of the things you're seeing. So this is obviously a more advanced video. It does go with the course. I want you to understand that it's all about your personality. If you want to play this entry, your personality suits you, and you like to be a little bit more aggressive, there's nothing wrong with doing that. If you like to be a little bit more conservative, you wait for the pinch play here. You're in more up closer to 28, still have a good entry point in this overall pattern, and you've overcome a lot of the resistance in the short term. So both plays would have worked in your favor. You're not looking at being all that late getting in at 28. If we look at where 28 is on this chart, it's right here taking out the high of those 3 bars, right? So what we're doing is we're getting confirmation on the small time frame that things are shifting back to the upside, and that is coinciding with what we're seeing in this. This is called trend alignment or technical analysis, right? Trend alignment. That's what we want. We want to get trend alignment when we can. Now, this to me can be done and considered trend alignment if you have some extra luxury, some extra things taking place that you're aware of, and this doesn't happen all the time, right? So you just got to be aware of that. If it does happen, it doesn't go to a new low, and then you have the big green bar show up after a divergence here, after the MACD has crossed back above a second time. To me, we're playing this for a 2 to 5 to 6 day move, right? So that's pretty good evidence that things are maybe shifting back to the upside. All right, so I hope some of these things really help you. Let me know if you have any questions. Thanks.